Today I want to show you what do moving averages teaches us. I was searching online and I was browsing YouTube, and I was amazed that there are so many videos on YouTube about trading moving averages, but they were so useless. They were not explaining what's behind those moving averages. And so I decided to put up a video how I use them, what do they tell me, what they can teach you, what they can teach us scalpers, especially scalpers. So, but before that, let's look at the little concept of conformity and volatility. So the conformity is a compliance with standards, and volatility is a tendency to change quickly. And we'll look into that with the Ninja style bars. But so I was just gonna invite you to compare the charts to see why why I use Ninja along with moving averages. So this is the chart for 1 minute MNQ. This is next chart is I'm sorry, it's the same chart. The next chart was 30-second bar, 30-second MNQ chart. And if you look here in this 1 minute, like you see, this bar is, let me point it. This bar is small. You're not sure whether it's going up or down. And if you're waited for the next bar, it's already too late. You already made the whole move. So the conformity or the standard of bars is non-existent in time-based charts. When you look at 30 seconds, it's price action is seen a little bit better, but still you have little bars, big bars, and you're not sure. But when you look at Ninja, we're looking at the same price move. We clearly see bounce, retracement, and see how it's conforming, how every bar is standard, but we still see exactly where the bounce is. So I find it's much more readable. So let's begin with understanding EMAs, how and what they can teach us. First of all, let's define EMA. It stands with simple moving averages, and moving average basically is an average price for the last period of bars. So if we say this gold line is 34 EMA, it means that it takes previous 34 bars, takes an average. And what's different between EMA versus SMA is that EMA puts more weight on recent price action, so it will always have less lag than SMA. That's why we use EMA always. So if you look here, if you look at this price bounce, this price bounce is is marked by this gold line EMA, and it takes into consideration these 34 bars. It takes this low and it takes this high and it calculates the average. Same thing here. If you look at this price average, then it takes 34 bars and it calculates this low point, high point, and these points, and it gives you an average. Same thing here. If you take this price point, it takes all these 34 bars and it calculates the average and gives out this this moving average price. So let's ask 3 questions, and the answer to these questions will hope you understand that the answer to these questions will give you a good lesson, will be very informative to you. So the first question is, what is the likelihood that price will come to its average price levels? Okay, So question number 1. What is the likelihood that price will come to its average price levels? If we begin here, and we go all the way up here, the question is, and the average price, is here. What is the likelihood? And notice I'm not asking you that what is the likelihood that price will return all the way back to here, to this level where it started from here. No, I'm asking what is the likelihood it will return to the average price. Look, this move would be asking too much, right? But this move is very reasonable. That's exactly what happened. So the answer and the lesson is that the prices have high likelihood that it will return to its average price levels. Look. So the lesson number 1. Prices return to its average price levels. Right here. And it happens everywhere else. Look here, we have the same thing here. If we take these 34 bars, it started here, low point here, high point here. What is the likelihood if price is here, it will return to the average price levels? It's very high. It did it here, and then it did it here. But we have a second question. What is the likelihood that if price reaches its average point, it will attempt to reach previous levels? So the question is this: assuming we are here, okay, and our price levels are previous price levels. Here is a high point, and here is a low point, right? So the question is, what is the likelihood that if price reaches its average point, which is here, it will attempt to reach its previous levels? So from here, it's either gonna go here, because this is the recent price level, or maybe you can argue it would be here. That'll be okay. Can it go here? Of course it can. Can it go to the low point? Of course it can. It can go both ways, and it's very reasonable to do so for the price. Again, we're not asking too much, and that's frankly how prices behave. So the answer is, from its average price levels, the price is highly likely that it will try to reach its previous levels. So by this example, it provides you a really nice scalp. If you're counting that the price will go to its previous levels, here's your scalp. So this is the lesson number 2. Lesson number 3. From which levels usually big move happen? Look, I didn't point it here, but we have a move here from 34 EMA. Look how big of the move is. Look at this leg. That's a big leg, and again, it started from 34 EMA. Then we go here. Look at here. Look at this leg. So if you look at this chart, you will notice that the biggest moves happen from 34 EMA. So that's another lesson, that if you will be trading from EMAs, it's highly likely that you will get into the big leg, big move. You know, let's look at the. Let me just. Here's another example. You know, if we were gonna ask, what is the likelihood that price will bounce from its average levels? Look, just first 60 minutes, we have 13 bounces. Bounces from here, bounces from here, from here, from here, from here. See, the 34 EMA acts as a magnet, and it also acts as a bouncer. You know, it attracts the price right here, and then price bounces from 34 EMA. So this is another lesson, that EMAs, they serve us as a attraction point and a bouncer point. Let's look at the universality of EMA. Let's look at different markets. You know, we looked at the MNAQ, and here is the same time, same day, but it's MES. You know, we have bounce here, bounce here, bounce here, bounce here, and see how price attracts and bounces from EMA. Let's look at different market. This is oil. Bounces from here, 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 here. See how price attracts to EMA and bounces from it. Let's look at rates. You know, it's a bounce. It's a different market, slow market, but still, you know, it bounces from here, it bounces from here, makes the largest leg. You know, bounces from here, here. So it's a different market, and they all, there's gold. We have bounce here, bounce here, bounce here, bounce here. See how price likes to bounce from 34 EMA. So I hope you see that it's a universality of the markets that makes trading EMAs very special. You know, when we moving averages is only one piece of the puzzle, and we probably need two more to make strategy out of. We need a bounce from EMA, and we need a sure money management. Let's look. If we are trading Ninja, you know, we have EMA here, which is line, which is point number 1. We have clear bounce from EMA, right? And we have stop loss. So this three this three makes the whole strategy basically. Your take profit would be here if you would just be using scalper's profit, or you could trail for more. But what I wanted to show you is that Ninja and trading with EMAs makes the whole strategy in itself. And one last benefit what trading EMA can teach us is that it provides an angulation filter. Angulation means when slow and fast moving averages are widening. You know, in angulation long you don't seek sells, in angulation short you don't seek buys. Let's look at the example. So here I added another EMA. 34 EMA is a gold line, and the fast moving average is this 8 EMA, it's a blue line. So let me ask you a question. If you are right here, you know, you came all the way here, what are you doing here? What are your options? You don't have any options, you just wait. There is no signal. Are you looking for buys? No, you're not looking for buys, because angulation, the difference between gold line and blue line, see how wide it is? So the wider the angulation, the stronger the trend. You don't trend against the trend. So when you are in this situation, you don't do anything, and you're not buying for sure. What are you doing here or here? Are you buying? No, you're not buying. You only look for sells at this market. See how wide this is? So you're not looking for buys, so it gives you an angulation, gives you a filter. You're not looking for buys, you're only looking for sells at this point. What about if you're here? Are you still looking for sells? Yeah, I'm looking for sells. I'm not looking for buys because angulation is high. So I hope you see that when there is a high angulation, you're only seeking trade in one direction. If you are here, maybe. But when you have a high angulation, it serves as a filter. So I hope you begin to appreciate the value of EMAs in scalping. Its universality across the markets, its bouncing and magnetic features, its starting points of larger moves, its retracements to its averages, its filter to keep you on the right side of the market, and its money management built-in system when used with Ninzarenko. So if you like the video, click that like button. Thanks for watching.